Hello, accounting students. Welcome back. This is Mrs. Bloomquist, and we are currently working on lesson 2 in chapter 4. Remember, chapter 4 is all about posting to a general journal, and the second lesson here is how to post amounts from a general journal and demonstrating then how to prove cash. And so these are some pretty important concepts as we're going forward. Now, we want to remember that we just learned how to create the numbering system for our accounts, and we want to make sure that we are using all of those general ledger accounts correctly. The other thing that we want to remember is that in addition to keeping track of all of our payments and our receipts in our cash account, we're also going to have a checkbook or an account at the bank that needs to match the balance of our general ledger account that is our cash account at all times. So we're going to make sure that we can use that account information at the bank and prove cash that it matches what we have listed then in our ledger account. Okay, so the first thing we want to cover is how to post an amount from the debit column of a general journal. It might be helpful to you to have your book open at this time and be looking at pages 98 and 99. Transferring information from a journal entry from our general journal to our ledger account is called posting. So you can see we have a cash transaction here in our general journal from January 2, and it looks like you can see our cash is a debit, so our cash was increasing, and our capital account then is also increasing. So this particular transaction was one where our owner put money into the business, and so the cash went up and the owner's capital went up. After we wrote that in the general journal, now we need to go ahead and write this part of the transaction, or the debit part of the transaction, in our ledger for our cash, because we need to be able to have now a running total of the information in our cash account. So the first thing we're going to do is carry the date, and then we're going to write the page number of the journal where this information is coming from. One of the big pieces of accounting is all of the proof that we have that transactions took place. So we should always be noting where the information came from. In this case, it's from General Journal page 1. The amount of the debit is $2,000, and so this, remember, is essentially that T account. So we're going to debit cash, and then in fact the new account balance carries over because this was our first transaction to our cash ledger, and you can see we now have a debit balance of $2,000. Then finally go back to your journal and write the account number where you posted the information to. So you can see the account number was 110, that's our cash account number, and then in our post reference we wrote in 110 because that was the ledger that we posted this journal entry to. All right, so then now we need to do the other half of the transaction, and we understand that the other account that's impacted here is going to be Michael Delgado's capital account. So again, we're going to record the date, the page number from the general journal where we can find this particular transaction, G1. The credit amount was $2,000, and the new account balance is going to carry over and be a credit balance of $2,000. Finally, we're going to trace back to our general journal, and we're going to put the account number where we posted this transaction, and you can see it is 310. All right, so posting a debit amount to an account with a balance. So in our first example where we were doing cash, there was no balance yet, so we were starting out, that was our very first entry. This particular example, we're putting something in our supplies account where there was already a balance in the supplies account. So you can see here's the general journal entry we're dealing with. On the 5th, okay, we have a debit to supplies, so our supplies are increasing, and we're crediting accounts payable, so our accounts payable is also increasing. When we go ahead and put this in our supplies ledger, you can see previous to the 5th that we had done a transaction. We posted something for $165 and we had a debit balance of $165. Now when we go ahead and post this new transaction from the 5th, we're writing in the journal number, we're writing in the debit, then the new account balance, you're going to see that we're going to be adding the $220 debit to the $165 balance, and the new balance in our supplies account is $385. Again, we're going to go back to the general journal and go ahead and write the account number of the supplies account in that post reference column so that you can see all of the information ties back out. All right, finally, looks like we're going to do this transaction right here for our accounts payable. Looks like for our accounts payable, we're going to be debiting accounts payable, which is reducing the balance, and we're going to be crediting cash, which is also reducing our cash balance. So when we're looking at our accounts payable for office supplies, this is a payable, which means it has a normal credit balance. Okay, and we're going to take this transaction from the 9th, and it's from General Journal page 1. It is a debit of $100. Previously, our account had a credit balance of $220. So now we're going to debit or subtract $100 from our credit balance to have a new credit balance of $120. Finally, you always want to go back to the post reference column and make sure you note the account number where you posted the transaction to. All right, so here now we're seeing the journal page that has all of the posting completed. So here's the journal page, and this was our general journal, and remember this goes in chronological order so that we have a nice chronology of all of the activities that happened in our business by order from the date. Then we have our general journal accounts, and I know this is really small, but if you want to look at those accounts, they start on page 103 in your book. And each one of these then shows us the transaction and what was happening, whether we were debiting or crediting, and then we can see the running balance in the account. And we can see for our cash account, we have a balance on the debit side, and that would make sense because this is an asset account, and we know those asset accounts, the normal balance is on the debit side. Okay. Proving cash. Now this is one of the important things that business owners have to do. Determining that the amount of cash that we have in our actual checking account agrees with the balance that we have in all of our accounting records, that's called proving cash. Now, ultimately, businesses can choose to do this at any time. And anytime throughout the month, the balance in their cash account in their general ledger should match what the account at the bank says. However, because of the delay in some transactions that would have cleared an account, businesses frequently only do this on a monthly basis. They don't do it more than once a month because it can be fairly time consuming, but they always should be doing it at least once a month to prove cash. So what you're seeing here is that we're looking at the cash balance in our checking account. This is the stub from our actual checking account. And then here is the ledger that shows us that we should have a debit balance, and it's matching what we have in that account. Okay, so 5 steps of posting from the general journal to the general ledger. And remember, we post from the journal, which is in chronological order from all the transactions that have happened, into the general ledger accounts so that we can keep that balance information for all of our accounts. So what are the 5 steps? We do the date, the journal number where the information came from. We write in whether it's a debit or a credit. We figure out whatever the new balance is, and then we go ahead and make sure we write down the account number in that post-reference column in our journal so that we have a good solid record of the entire transaction cycle. Then, when both debit and credit amounts have been posted to an account, what determines whether the balance in the account is a debit or a credit? So whenever debits exceed credits, the balance is a debit. Whenever credits exceed debits, the balance is a credit. So you just always want to follow along to make sure that you're accurately keeping track of the balance information and whether or not you should have a debit balance or a credit balance based on wherever the normal balance is for the account. Okay, so from this point, the thing that you really want to be thinking about that would be pretty important for you would be if businesses don't have a lot of transactions, would there ever be a reason to only journalize and to not post information to the general ledger? And remember the difference between the information that's in the general journal versus the information that's in the general ledger, and why we would want to have information organized the way it is in our general journal, and then why it is we would want to have all the information broken out into the general ledger accounts. And that's a fairly important record keeping piece and financial reporting piece that you would want to make sure that you're thinking about. The last question in the review here, the two amounts that we compare when we prove cash, remember it's our cash account and our checking account. All right, from here, take the quiz form that's out on the website, and after you do that, go ahead and do the work together and on your own. If you have any questions, come see me. Good luck.